It's late night, you're in a bed scrolling through house listing just to look, and every house that looks normal, not fancy, just normal, costs $500,000. 3 bedrooms, small yard, and average kitchen, and it's called a starter home. If it's normal, why does it feel impossible? Because today we're not talking about opinions, we're talking about simple math. And the mess is the problem. In many US cities, $500,000 is no longer luxury, it's basic. But the median household income in America is around $84,000 per year. So we're asking families who make $84,000 to afford homes that cost 6 times their income. That should already make your pause. But banks approve people, agents say it's manageable, social media says just buy. Here is what nobody clearly explains. Getting approved for a mortgage is not the same as being able to comfortably afford the house. These are two different things. Let's break it down in simple terms. First, the down payment. The traditional advice is 20% down. On a $500,000 house, that's $100,000 in cash. Most Americans don't have anywhere near that saved, so people put down 5% or 10%. Let's say you put down 10%, it's $50,000. That means you borrow $450,000. At today's interest rates, your mortgage payment would be about $2,800 per month. But that's not the real number. You also have property taxes, about $500 per month, home insurance, about $300, maintenance, about $400 per month if you average it out. And if you didn't put 20% down, PMI another $200 to $400 per month. Now add it up. You're at roughly $4,300 to $4,400 per month. That's what it actually costs to own that $500,000 house. Not just the mortgage, the full picture. Now, let's ask a simple question. How much do you need to earn to comfortably afford $4,400 per month? Financial experts say housing shouldn't be more than about 28% of your income. To make $4,400 equal 28%, you would need to earn about $180,000 per year. Even using loser bank rules, you would still need about $150,000 per year. Most households don't make that, which means most households cannot comfortably afford a $500,000 home. Not because they're lazy, not because they're failed, because the numbers don't work. Let's look at a realistic example. Imagine a couple earning $160,000 combined. That sounds like good money. After taxes, they may take home around $9,500 per month. Subtract $4,400 for housing. They're left with about $5,100. Now subtract car payments, car insurance, gas, student loans, health insurance, groceries, and utilities. Very quickly, that leftover money shrinks to maybe $1,500. And that's before anything goes wrong. If the air conditioner breaks, that's $1,000. If someone loses a job, everything falls apart. If a medical bill shows up, it goes on a credit card. That's what being house poor looks like. You own a house, but you're stressed all the time. You're one but months away from a problem. And this example is a household earning $160,000, well above average. Now imagine earning $120,000 or $100,000 or the median $84,000. At that level, a $500,000 house isn't just tight, it's extremely risky. So why does this keep happening? Because the system pushes you to buy. The bank makes money when you take the loan. The agent makes money when you buy. The insurance company makes money when you insure it. No one makes money when you decide this is too expensive for me. And culturally, we've been told that renting is throwing money away. But struggling to pay your mortgage every month isn't freedom either. Real wealth is not just owning something. Real wealth is having margin. Margin means you can save, you can invest, you can handle emergencies, you can sleep at night. If a house removes all your margin, it's not building wealth, it's creating pressure. So instead of asking, what can I approve for, ask, what can I afford without stressing every month? Maybe that means buying a cheaper house, maybe it means waiting, maybe it means renting and investing for now. There is no trophy for buying the most house you can possibly qualify for. The goal isn't to impress people, the goal is stability. Let's simplify everything. A $500,000 home often costs around $4,300 plus per month in real expenses. Comfortably affording that usually requires $150,000 to $180,000 income. Most households earn far less than that. Scratching to make it work often leads to stress. This isn't about being negative, it's about being realistic. Owning a home can absolutely be a great financial move, but only if you can afford it without risking your entire financial life. The real question isn't, can I buy this house? It's, will this house make my life better or more stressful? Be honest with yourself, because mass doesn't care about trends, and your peace of mind is worth more than a listing price.